Hi, I'm Paige Steers. I'm here at the MBA conference in Atlanta, bringing you insights from experts. And I'm here with Wes Boatwright of Jones Lang LaSalle. Wes, let's talk about what interest rate expectations are for 2012. Jones Lang LaSalle committed a survey, and that survey said there'd be some modest rate increase perhaps in 2012. But here at the show, we're hearing a lot of expectations it won't rise. Where do you think it'll fall in 2012?
Well, I think there's what probably will happen and then what people are concerned may happen. And a lot of that is tied with where our economy is going. We're starting to see some acceleration with respect to job growth. The government obviously has held interest rates low, artificially low for some time to try and generate some increase in the GDP in our economy. And I think there's always that concern about the inflation that can cause. But I think the Fed's recent announcement that they don't see the need to raise rates anytime soon, coupled with the fact that there seems to be, quite a bit of supply of capital out there for real estate finance, would suggest that there's probably not going to be that much upward pressure on interest rates in 2012. It's a supply-demand thing. There's more capital than there are deals out there right now. So we think that combined with what is optimistic job growth and hopefully sustainable, probably is not yet at the inflationary stage. So probably not a lot of pressure on rates this year.
Okay, well, that's good news for borrowers. Let's talk about what the lender's opinion is when they're looking at underwriting and how they're really writing their loans. We heard a lot about recourse loans in the past, 1 or 2 years. Has that use of recourse really leveled off, or would it still see that as part of the equation in 2012?
Well, there's certainly plenty of capital out there that still offers non-recourse loans. I haven't really examined the trend with respect to more recourse loans last year, but my suspicion would be that we have gone through, a reset in the market with respect to valuations. There are going to be cases where a particular borrower, has a loan that is out of balance relative to the value of the asset. And in that particular case, they have an option of either refinancing with a non-recourse lender and putting more equity in, or potentially doing a bank loan where there's a strip of recourse. So, there are still lenders out there doing non-recourse deals, but my guess would be, if borrowers are targeting banks, then there's definitely going to be some recourse for the most part.
And they were doing a lot of commercial bank loans last year. 49% of those surveys by Jones Lang LaSalle indicated that they were having to have some recourse. So it sounds like it's still there. Probably see it in spots in 2012.
Avoid it.
Yeah, well, I'm sure the borrowers are glad to hear that. Let's talk about the overall market, the lending market in 2012. You've been meeting with lenders the last couple of days. What do you think is the prevalent trend you're hearing? Got more capital?
Yeah, I would say generally, pretty much everyone we've spoken with has at least similar, if not increased allocations for 2012, which is encouraging. And that's across the board. So everyone was happy with their production for 2011. I haven't really heard anyone have any really sort of negative reviews of 2011. Obviously, the CMBS market wished that they could have continued to operate and function through most of 2011. They had a slowdown in the summer, but they're back. We've seen spreads compress on the CMBS side since the fall, 100 plus basis points. So, my guess would be that this year there'll be plenty of capital out there, and that once again there'll be fewer deals for them to do. And so, I would suggest that perhaps that'll keep interest rates down, and lenders will start to stretch on loan amounts and perhaps on some of the risk associated with individual deals. So,
okay, we'll watch for that in 2012. We'll look for wider availability of capital, for more deals, and hopefully some attractive pricing. Thanks for sharing your insights with us, Wes.
Great. Have a nice conference.
Thank you.